Thank you. Thank you. Well, good morning, everyone. It's good to be back for our 13th. How many of you have been here for 13? Has anyone been here for all 13? A few. Wow, that's impressive. Thank you for coming for all 13. So we have a lot to get to. We're going to talk a lot about what's happening in the world. There is a lot happening in the world right now. A lot of things are in flux at the moment. We're going to try and touch on as much of that as we can. I may throw a Browns joke or two in. As you know, I like to do that. And I may, but I may not. We'll see. But let's get right into it. We have a lot to get to. First of all, a little bit about ISA. If you don't know what ISA is, that's International Strategic Analysis. We are a provider of economic forecasting, country market intelligence, advisory services. We service major companies like McDonald's, Coca-Cola, the NBA, to smaller companies looking to expand into international markets. So if you want to learn more about ISA, please talk to me after the presentation. So what are we going to do today? The structure is a little bit different than in years past, but relatively familiar. We're just going to talk about some of the key issues and trends that are driving the global economy at the moment. And then we're going to go around the world and look at the health of the global economy. Then we're going to go region by region to see just how things are right now for the global economy. And then we have time for some Q&A. So if you have any questions, by all means, feel free to ask me at the end of the presentation. So what are some of the things we're looking at in terms of the global economy? What I want to focus on at the beginning here is there's three key drivers to economic growth. There is trade and investment, a very important driver of economic growth. There is demographics. Simply put, the bigger the population, the more natural economic growth you can have. And then we're going to talk about productivity and why there has not been significant productivity growth in recent years. In fact, we call those the three great disruptions. We've had disruptions to trade and investment in recent years. You know about the USChina Trade War. You know about some of the other trade disputes. You know that population is changing dramatically in many of your key markets. And you know that productivity growth has been disappointing. So we're going to touch upon all of those first. So what are some of the key trade and investment trends and issues that we're looking at the moment? Well, global trade, even before the US-China trade war, has been relatively depressed. And I'll show you some statistics in a little bit. We've been in a period now of about 7 or 8 years where global trade and foreign investment has been relatively low, with growth almost non-existent. The US-China trade war, which we're going to talk about in a little more detail, has been highly disruptive for some sectors of the economy and for some economies around the world. It's caused a lot of uncertainty. It's caused a lot of confidence to be knocked down in recent months. And the next big trade issue we're looking at is the potential for bigger trade disputes between the U.S. and Europe. And that's something we're going to be looking at in more detail. We're going to look at some of the factors. Why are we having these trade disputes now? Why is global trade suddenly something so controversial? We're going to look at some of the economies, how they've been impacted by some of these trade troubles, and then we're going to look at foreign investment. Why has foreign investment also been depressed? In recent years, we've seen negative foreign investment growth. We assume we live in a time of globalization with trade growing and investment growing. The fact is, for almost a decade now, that has not been the case. So we're going to look at that in a little more detail. So what you see here on this chart on top is recent global trade growth by year. And then if you look at the bottom, that's global trade growth by decade. And there's a clear trend. Global trade growth has been falling consistently now for the past decade, if not longer. This goes contrary to everything we talked about. When we started doing this here in the late 2000s, we were talking about much higher rates of global trade growth. And we saw global trade consistently growing faster than the global economy. Well, over the past 7 or 8 years, the opposite is true. The global economy has grown substantially faster than global trade has grown. In fact, over the past, over the past 7 years, just 1.6% per year growth in global trade, whereas the global economy during the same period grew by 3.5% during that period. So a substantial change. Suddenly, the global economy is growing faster than global trade. In the outlook, when we look forward, there's not a lot of expectations for faster global trade growth in the years ahead. We'll talk about some of the reasons going forward. First of all, the US-China trade dispute. Now, you know there's been a phase 1 trade deal which has been signed by the US and China. In our view, this is kind of kicking the can down the road. Most of the tariffs that were put in place during the trade war remain in place. And for us, perhaps most contentiously, China is expected to import more than 200 billion additional imports from the United States. Now, China hasn't been importing 200 billion in total imports from the United States at all. So the expectation that suddenly imports, that U.S. exports to China are going to more than double over the next 2 years are quite difficult to believe. And we expect that to cause some problems. Now, that's probably not going to cause any problems this year. But what we're expecting is about 2021, 2022, when the realization comes that China is not importing 200 billion more worth of U.S. imports, we're going to see some additional trade friction here. And in fact, if you look at these charts, and it's a little hard to read, but you do receive the presentation, that dotted line on the top of each of those charts, that shows where, according to this Phase 1 trade deal, U.S. exports to China are supposed to reach. And the other lines show where they would be going under current trends. And you can see there's a huge discrepancy between the two. And for us, this is the big sticking point to this Phase 1 trade deal. It's just, you're just not going to see this happen. Now, yes, you're going to see an increase in U.S. exports, probably in the agricultural sector, probably in the energy sector, and that's going to be simply taking exports from one country. So, for example, soybeans from Brazil may be replaced by soybeans from the United States. So it's going to cause some significant disruptions for other economies, and nevertheless, the chances of China importing so much from the U.S. are slim indeed. So while the U.S.-China trade war is kind of on hold, nothing much has changed at the moment, there is a growing threat of a U.S.-European trade war. Now, we've already seen some shots fired in this trade war. The United States imposed tariffs on European imports because of subsidies going to the aircraft maker Airbus. There's going to be a similar ruling on Boeing this summer, so we could have retaliatory tariffs from Europe. We've seen issues over the steel tariffs here in the United States. There's a lot of pressure now to put tariffs on automotive imports from Europe. So we're seeing the potential for a significant trade dispute between two more large economies. Another issue is the digital tax. I don't know how familiar you are with that. France was planning to implement a tax on large tech companies, most of which are, of course, American. There was an agreement between President Trump and President Macron of France that this tax wouldn't be implemented this year, but there are at least 6 or 7 other European countries that are looking to implement a similar tax. And the U.S. has said clearly any country that implements such a tax will have tariffs put on them. So the potential for significant trade disputes between the U.S. and Europe is substantial in 2020. So why are we seeing this surge in trade disputes? And it's not just the U.S. and China, it's not just the U.S. and Europe. We're seeing many countries around the world engaged in varying types of trade disputes. One key reason, of course, is the loss of manufacturing jobs in developed economies. We've seen that here in Ohio. We see that in many countries around the world. Manufacturing jobs left going to emerging markets and other places, and this has led to a political backlash against trade and against foreign investment. At the same time, we've seen a relative lack of wage growth. Now, wage growth in the United States has picked up over the last 12 to 18 months, but still, it's lagging tremendously behind economic growth and many other growth indicators. So this, again, raising public anger against trade, against the loss of jobs, against the loss of potential wages. This has led to the rise in protectionist policies, both from politicians on the left and politicians on the right. And not just here in the United States, in many parts of the world. Protectionist policies, protect our jobs, protect our industries, are very much in vogue in many parts of the world at the moment. At the same time, we're seeing technological change. You're well aware of this. We've talked many times about the impact of automation on the manufacturing sector. You can bring manufacturing jobs back to Ohio, manufacturing output, excuse me, but you're not going to be bringing the jobs back. These are going to be increasingly automated factories. Another factor is localization. This is a big issue right now around the world. We are seeing a definite trend towards building your products or supplying your services right where your consumers are. This is a trend we've seen growing over the last few years. It's something that is playing a key role in the reduction in trade, the reduction in investment growth, and something we need to watch going forward. And then finally, demographic changes, and we'll talk more about this going forward. This is changing the electorate. We are seeing a more conservative electorate. We are seeing an electorate that is more in favor of protectionism, in some cases nationalism and isolationism, and this is leading to major political changes in many parts of the world. So what countries are at risk from a trade war? Again, you've probably seen this slide, but the United States is less at risk than just about anybody else right now. We only derive about 12% of our economic output from exports. Now, that's still a much higher level than it was in the past, but compare that to Germany, which about 46% of their economic output comes from exports. Look at Mexico and Canada, who are heavily dependent upon the U.S. market. So the U.S. is operating from a position of strength when it's launching trade disputes with other countries. In the countries that suffer, and if you look at the economic results of a lot of the countries at the top of this list, it shows that these trade disputes have had a major impact on the health of their economies.